What is going on, guys? Welcome into Stock Talk with Nico Criticos. Today, we're going to be taking a look at Adobe stock because the stock just reported earnings and now it's down over 8%, nearly almost 9% now down after hours. And I've been watching this stock 500. I was thinking about buying it, but I said, no, I'm going to wait because I know this stock could be volatile, so I'm going to wait. And when it was 480, 490, I was watching it. Then just as of the last couple of days, it went to over $550 a share, and I was thinking, wow, well, I could have made some money if I would have bought that. But now look, we're back down to $500 a share because it looks like all that happened was they beat on revenue and on EPS, but their forecast for next year's revenue was slightly lower. So as you can see here, we have 5.5 billion was expected and they did 5.6 billion. Then $4.67 EPS was expected. They did 4.8, but for next year, analysts were expecting 23.7 billion and now they're going to do between 23.3 and 23.5. So we're talking a couple percent of a difference. It's really not that big of a difference. It's almost the stock should be down like 1% or 2%. Not a big deal, but obviously investors and Wall Street are being kind of dramatic with this, and the stock is now down 9%. So if we want to look at the valuation, we can see that we're trading at roughly 46 times earnings. If we run the numbers on this, we can see that net income for the trailing 12 months was $5.3 billion, and this company is now trading at a $242 billion market cap, which puts us at roughly 46 times earnings. Okay. So based off of this chart, 46 times earnings is kind of the average, really. I mean, you look at a couple of years ago, it was maintaining 50 times earnings, and then it shoots up for a little bit, and then it comes back down to 40, shoots up, comes back down. Anything under 40 is kind of rare for Adobe, really. I mean, it normally trades at least 45 and up. So I don't know. I don't want to say this is like it's a cheap valuation for the stock, but it's fair. I would say it's a fair valuation. If we look at what analysts have them doing, see on the forward basis, forward PE of 26 over the last year and a half, 26 is definitely on the cheaper side of things. I mean, it's been anywhere from a 24 up to a 34. So 26 is on the cheaper side. So I don't think it's a bad buy. As far as what analysts have them doing, EPS is still looking strong. $18 last year, $20 expected this year, and then $23 expected the next year. Then revenue, 10 to 11% growth, not bad at all. That's definitely decent. I mean, honestly, compared to most stocks, 40, these valuations of paying 50, 55 times earnings is a lot. It's not cheap. But for Adobe, that's just what it trades at because it's a high demand stock. People like to own it. And I think artificial intelligence is really going to help out this company a lot with profitability and just the amount of products and services they can offer. So I think Adobe has a bright future ahead, and I'm kind of interested in the stock, but again, I feel like it very well could come down to 450 or something, and that's where I want to be careful. I don't want to buy it up too fast right now, but I'm gonna think about this, and I might start making a position soon because there's no reason the stock should be down this much, really. We're down 9% now, and just because their revenue is going to be down, they lowered the guidance by 1% or whatever. Everything else looks strong. Let's look at here. Let's go on a yearly basis. Let's see. Cash to debt is in a good position right now. 7.8 billion. That was 2023 though, but still. How about now? Okay, even now. 7.5 billion in cash, 4.5 to $5 billion of debt. So a solid ratio there. The shares out, they're buying back shares. That's helping out the stock. And then on an annual basis, let's look at what they did for ROI. 31% return on capital numbers, very strong there. So there's not a whole lot I don't really think there's a whole lot to worry about, really. I mean, I think the numbers look solid. The balance sheet is solid. The expected growth looks good. So not much to complain about here. That is my analysis for Adobe stock. Thank you for watching, and I will see you in the next